Something big is happening in the gold and silver markets, and almost nobody is talking about the real story. Prices are falling, headlines are negative, analysts on TV are calling it the end of the rally. But behind the scenes, something completely different is unfolding. Massive amounts of physical metal are being taken out of the system, quietly, consistently, and at a scale we have not seen before. Imagine this for a moment. Tens of millions of ounces of silver are being delivered through major exchanges, but even more is leaving the system entirely. Not just traded, not just shifted on paper, but physically removed, loaded onto trucks, insured, transported, and sent somewhere unknown. Now ask yourself a simple question. Who is doing this? Because this is not retail investors. This is not small traders. This is not panic selling. This is organized. This is strategic. And most importantly, this is expensive. We're talking about billions of dollars worth of gold and silver being taken for delivery month after month for over a year now. And yet, the media keeps focusing on one thing only: price. They tell you gold is weak. They tell you silver is overbought. They compare it to past crashes. They throw fear into the market. But they are missing the one question that actually matters. Who is buying all the physical metal? Because in any market, price can be manipulated in the short term. But physical demand? That tells the real story. And right now, the smartest and most powerful players in the world are not selling. They are taking delivery. There's a famous idea. Smart money doesn't react to the market. It moves ahead of it. It positions itself before the big move happens. So if billions are being spent every single month to acquire real metal, do you really think these players don't know something? Or maybe they are simply preparing for what's coming next. Welcome to Gold Silver Scope, where we break down what's really happening in the gold and silver markets, beyond the noise, beyond the headlines, and straight into the truth. To understand what's really going on, you have to separate two completely different worlds: the paper market and the physical market. The paper market is where prices are set. Futures contracts, leveraged trades, ETFs. This is where most people look. And this is also where most of the volatility happens. But the physical market, that's where reality lives. And right now, these two are telling completely different stories. On one side, prices are being pushed down. Fast drops, sharp corrections, panic selling. It creates the illusion that something is wrong. But on the other side, physical demand is exploding. We are seeing massive amounts of silver and gold being taken for delivery across major exchanges. Not just in one location, but globally. And more importantly, a large portion of that metal is not coming back. It's leaving the system. This is critical, because when metal leaves the exchange system, it reduces available supply. And when supply tightens while demand stays strong, it sets the stage for a much bigger move later. Now here's where it gets even more interesting. Commercial banks, the same institutions that have historically held large short positions in silver, are now reducing those positions. In fact, their short exposure has dropped to extremely low levels. That's not normal. It suggests a shift in strategy. Instead of betting against the market, they may be repositioning, possibly even preparing to benefit from a future rise. And at the same time, large players are using price drops as opportunities to accumulate. Think about that. When the market crashes, most people panic. They sell, they exit. They believe the story they're being told. But the smart money? They do the opposite. They buy. This pattern has repeated itself over and over in financial history. Weak hands sell in fear. Strong hands accumulate in silence. So what we're seeing right now is not weakness. It's a transfer. A transfer of assets from emotional investors to informed strategic players who understand the bigger picture. And that bigger picture is far from bearish. Now, let's go deeper into what triggered this recent drop in gold and silver prices, because this is where most people get completely misled. At first glance, it looks like a normal market correction. Prices went up too fast, so they came down. Simple, right? But the reality is much more complex. This move was not purely driven by fundamentals. It was structural. In simple terms, it wasn't about supply and demand changing. It was about how the market is built. There was a massive increase in leveraged positions, especially through ETFs and futures. At the same time, margin requirements were sharply increased, in some cases by over 300% in a very short period. Now think about what that does. If you're a trader using leverage and suddenly you need 3 times more capital to hold your position, what happens if you can't provide it? You're forced to sell, and when enough people are forced to sell at the same time, it creates a chain reaction. Selling leads to more selling, which leads to panic, which leads to even more selling. And just like that, the price collapses. But here's the key point. This type of selling is not natural. It's not based on long-term value. It's mechanical. It's forced. And forced selling creates opportunities. Because while this cascade is happening, someone else is on the other side of those trades, buying everything. We saw major institutions covering positions at the bottom. We saw large-scale physical deliveries happening at the same time. This is not coincidence, it's coordination. The drop in price created the perfect environment to flush out weak positions and reset market sentiment. Before the drop, sentiment was extremely bullish. Almost everyone expected higher prices. After the drop, fear returned. Doubt returned. People started questioning everything. And that's exactly what needed to happen. Because markets don't move higher when everyone is already bullish. They move higher when doubt is high, when positioning is light, and when strong hands are in control. And right now, all of those conditions are being rebuilt. If you really want to understand the scale of what's happening, you need to look beyond the Western markets and focus on global demand, especially from the East. Because while prices were falling, some countries were buying silver at record levels. We're talking about hundreds of tons being imported in just a matter of weeks. In fact, one of the highest monthly import levels ever recorded happened during this price drop. Let that sink in. Prices are falling, and demand is surging. That is not bearish behavior. That is accumulation, and it doesn't stop there. Large amounts of silver have also been withdrawn from major exchanges in Asia in very short periods of time. At the same time, inventory levels in Western exchanges have been steadily declining over the past several months. This is a global trend. Metal is moving, and it's moving fast. So again, the question comes back, who is behind all of this? Because this is not random. This is not retail. This is not short-term trading. This is long-term positioning. Some of the biggest players in the world, institutions, central banks, and sovereign entities, operate on a completely different level. They don't chase price, they prepare for macro shifts, they look at debt levels, currency devaluation, geopolitical risk, energy markets, and long-term monetary trends. And right now, all of those factors are pointing toward instability, rising global debt, persistent inflation, pressure on currencies, and increasing geopolitical tension. In that kind of environment, real assets become extremely valuable, especially gold and silver. So while the public is focused on short-term price movements, the smart money is focused on long-term protection and positioning. They are not reacting, they are preparing. At the end of the day, the message is very simple, but very powerful. Nothing has fundamentally changed in the gold and silver markets. If anything, the long-term outlook has become even stronger. What we just witnessed was not the end of a bull market. It was a reset. A reset of sentiment, a reset of positioning, and a reset of expectations. The fear we saw in the market was not a sign of weakness. it was an opportunity being created. Because every major move higher in history has started the same way. With doubt, with confusion, and with most people standing on the sidelines. Meanwhile, the informed players, the ones with capital, patience, and strategy, continue to accumulate. They are not focused on today's price. They are focused on tomorrow's reality. And if there's one takeaway from everything we've discussed, it's this. Don't follow the noise. Follow the money. Because the real story is not in the headlines. It's in the actions of those who are quietly positioning themselves for what's coming next. If you want to stay ahead of these moves and understand what's really happening in the gold and silver markets, make sure you stay connected with Gold Silver Scope, where we break things down in a simple, clear, and real way.